What is happening, people? It is your boy Jack, and today we're back with another video. We're going to talk about 5 stocks that I'm going to be keeping a particularly close eye on this week. I did a video like this last week and it was perceived really well, so I might make this into a bit of a series on the channel. Maybe every single Monday I'll do a video like this. If you do enjoy these kind of videos, all you have to do is smash that like button and I'm going to be very inclined to make more of them. As of recording this video right now, guys, we are on about 1420 subs. It's 7 minutes to 2 on Monday. By next week, can we get to 1500? That's the question. Help a man out, hit that subscribe button, let's get to that juicy 1500 number. But we have some stocks to speak about, people. 5 stocks I'm going to be keeping an eye on this week. Obviously, every week I watch 30, 40 stocks, but I'm not going to make a video on every single stock. I'm just going to break down a few. Some of these companies I've never really even looked into before. Some of these companies I have positions in already. There's a few different scenarios going on around here. But you already know we're going to save the best for last, so make sure you watch till the end, baby.
Stock number 1.
JP Morgan Chase & Co. A little bit about JP Morgan and who they are. They're one of the world's oldest banking institutions, back to 1799. That's a very long time ago. It's the largest bank in the US with over 5,100 branches, 16,000 ATMs, and 2.6 trillion in assets. They're a fairly big company. Obviously, they're a bank. They just do all of the normal banking things: consumer and community banking, corporate and investment banking, asset and wealth management, and commercial banking. That's what banks do. It don't need to be any more complicated than that. So a little bit about their dividend, okay? There's a dividend streak of 10 years. Not the best in the whole world, let's be completely honest about it. With that being said, they have a dividend safety of 60 currently, which given this current situation is not terrible, and a dividend yield of 3.78%. They also came out on April 6th and said that they hope to maintain this dividend. Hope being the key word. Anything could happen. I wouldn't be surprised if they stop paying this dividend or if they just lower it temporarily, but there is a decent chance they do keep on paying it. So how have they done the last few months given the situation? Well, we can see that they were up very close to $140 a share. They fell down just below $80 a share and we're currently selling at $95 a share on the bun. A 3-month change of negative 31.26%. And next of all, just having a look at their max stock chart, it's a little bit all over the place, but we can see that there's been absolutely immense growth the last 10ish years, 7-8 years realistically. And now look at this dip. After all of this growth, this massive dip, it could be giving us a chance to get in relatively cheap, as pretty much we can say about any stock in the market right now, because nearly everything has dipped because of the virus. For me, one reason I'm watching this company is simply because I want to diversify my portfolio a little bit more, get a bank stock in there. I'm currently in Wells Fargo. I got in there very early on and it's doing absolutely horrifically, one of my worst stocks so far. Maybe now will actually be a little bit of a better time to get into one of these big players. One thing though that keeps me a little bit tentative: their PE ratio is 13.8, which is quite high compared to its 5-year average of 11.5, so they could be overvalued. But anyway, they're on my watch list. I'm just going to be keeping a close eye on them. I won't jump into anything. I honestly don't plan on buying many, if any, stocks this week, unless the market drastically moves.
Number 2.
Okay, so this next one we're looking at, a lot of you may not actually know who they are. They're not spoken about too much. They're an REIT. We've spoken about these a bit on the channel before. I'm currently in O. That is my only other REIT. And these guys are called Essex Property Trust. They have a lovely dividend safety of 93, a dividend yield of 3.19%, and a dividend growth streak of 25 plus years. So that's absolutely awesome. What do? They currently have ownership interest in 250 apartment communities comprising approximately 60,000 apartment homes, with an additional 7 properties in various stages of active development. They acquire, develop, redevelop, and manage multifamily residential properties in West Coast. What I obviously like about these guys off the bat is that 25-year growth period. You know what I mean? That's not easy to come by. Pairing that up with a 93 safety score and a 3.19% dividend yield, tasty. And one other thing is that it seems to be relatively fairly priced as of right now. Its ratios, its dividend yields, they're all around where they've been the last 5 years. So, you know, you're spending a fair price on your stocks. Obviously, in an ideal world, we buy undervalued stocks. But again, I'm not necessarily buying them. They're on my watch list. I'm just going to be keeping a close eye on them. And how have they performed the last 3 months? Quite well. They're only down 15.57% altogether as of right now, which for the large majority of companies is good. It's very good. We can see they have a current share price of $260 and they peaked out probably around $330ish. Keep in mind that REITs could be a fairly scary industry to be getting involved in now, especially ones like Essex who are, you know, over residential properties, just because of everything that's happening in the world, all the mortgage freezes, the new interest rates. It's a bit of an unknown territory. Nobody knows what's going to happen with the housing market next, and that could definitely affect big players like Essex Property. so tread lightly is what I'd say. But I really like the look of them, and I think they have an amazing long-term outlook. I'm going to be doing more research into them and just keep my eyes on them. Yet again, I'm not necessarily buying these companies, just keeping a close eye on them. Number 3. So number 3 for me is actually Disney, and I know a lot of people have mixed opinions on Disney, but I really like them. I do currently own a position in them, and they're performing decently for me at the moment. But I would be in no way surprised if this company is to dip below the $100 mark again and even approach around the $90 mark. That's why they're on the watch list. If I see that dip happening, if I can get Disney around $90, you betcha I'm getting Disney. But yeah, we all know who Disney are. You know, Mickey Mouse, Disney Plus, theme parks, Goofy, everything along those lines. But anyway, dividend safety of 60. Dividend yield 1.65%, and dividend growth streak of 27 plus years.
Pretty tasty.
Now, a few of the things that are obviously very poor for Disney right now. All of the theme parks closed March 16th. This soon followed by closing its hotels, malls, cruise lines on March 27. Disney said its US parks would remain closed indefinitely, so we don't know until when. Major movie theaters closed. Professional sports seasons were delayed. If you don't know why that matters, it's because Disney bought ESPN through its acquisition of ABC. Simply put, the things that make Disney an awful lot of money are under extended pressure, obviously. But I mean, look, Disney's not going anywhere, you know what I mean? Biggest entertainer in the world, Mickey Mouse, you know what I mean? The good mouse isn't going to disappear off the face of the earth. They are here to stay. Just look at their max stock chart. Boom, it's beautiful. Loads of growth, and then boom, massive dip. Look at the 5 year. We were the lowest we've been in 5 years on a company like Disney. That's crazy. Yeah, as I said, I'm invested in Disney already. I love them as a company, and I want more stocks, so that is why I'll be keeping a close eye on them. Numero 4. Pepsi, baby. I love this company. If you guys have watched my videos, you know that I absolutely love Pepsi. I made a full video on Pepsi versus Coca-Cola. You can check that out if you want. But I love them. I love them as a stock. They have a dividend safety of 93, a dividend yield of 2.78%, and an uninterrupted dividend streak of 47 plus years. So for you dividend investors out there like me who want to invest in companies that will almost certainly keep paying you their dividend no matter how tough financial times get, this is one of those companies. They sell products that people are going to buy regardless of whether or not times get a little bit more tough financially. Bottle of Pepsi right here. Bottle of Pepsi right here. I love Pepsi, man. You know what I mean? It goes really well with my whiskey collection. I know that's not a traditional mixer to use, but trust me, Pepsi, cherry and whiskey. Now again, looking at the PE ratio, not the best in the world. PE ratio of 23.9, 5-year average of 21.3. It's not the worst in the whole world, but it definitely could be slightly overvalued. But look at that. Look at the 3-month change. Are you seeing this? Down 2.63%. They have performed incredibly. Considering there are still many companies who are down 60-70%, incredible. This is one of those stocks I want to make sure that I am buying frequently. They're one of my favorite stocks, one of the stocks I personally believe in more than the large majority of them. To me, they're very similar to a Johnson & Johnson or a Procter & Gamble. They're a stock that I plan on buying and holding forever. So what I obviously am hoping to see is a very quick decline so that I can get in a little bit cheaper. Even though I already have shares in them, I would rather them go down a little bit lower so I can get in at a cheaper price. But yeah, I absolutely love Pepsi. Again, I made a video on Pepsi versus Coca-Cola. If you want to know why I love them so much, even compared to the king, the giant who is Coca-Cola, make sure to check that video out after this one. But don't go yet. We have one more stock.
Stock number 5, the one we've all been waiting for.
You probably guessed it, it's Carnival. Look, I didn't keep much of an eye on them last week, I'll be honest with you. I just got exhausted from constantly looking at Carnival and being like, what is going on? But ultimately, I have to keep a close eye on this, guys. There's just so much potential if they come down to a price that I'm happy with. I have to keep an eye on them. 3-month change of negative 75.8%. That is massive. And you want to know what's more massive? Right now they're trading at $12.56. There's been 2 points in time where they got down as low as $8 a share. The second one they dipped below $8 a share. And they're still down 75.8%. They've gone up pretty much 60% from their low and they're still down this much. I have like 200 billion videos on Carnival, so I'm obviously not going to go in depth. They'll be in the description whenever. But they're just such an interesting stock at the same time. They're the biggest player in the cruise line industry. So if you believe that once this all blows over, there's going to be any cruises left, that's going to be Carnival. They're the biggest, they'll survive. They've taken on a lot of extra debt to help them survive longer. Blah, 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 blah. I've said it all again. This isn't a Carnival video, Jack. Stop. But they will be the 5th company that I'll be watching very closely. Personally, for me to get into Carnival, they're going to have to drop below $7. It's just that simple. They're going to have to drop below $7 or else I'm just not going to touch them. and that's fine by me. If I miss out, I miss out. I wish all of you guys who are already in Carnival the absolute best, and I'm still saying prayers for all of your blood pressure and hearts. So guys, that is it. They are the 5 stocks I'm going to be keeping a very, very close eye on this week. Now please keep in mind that I'm not a financial advisor. Everything in this video is just my own thoughts and opinions. Always form your own ones, like George the Giraffe does. He's a very smart fella. Just don't invest in these stocks because I or anybody else on the internet does. Always make your own opinions. As I said earlier on in the video, I don't even necessarily plan on buying any stocks this week because I'm very afraid of what the market is going to do next. Don't get me wrong, I more than likely will open some positions, but I'm not going to be very aggressive this week whatsoever. I need to wait for a few red days. But please guys, if you've stayed until the end and you're not subbed, please hit that button. Let's help man get to 1500. That would be such a cool number to get to. And drop me a comment with your thoughts down below. What companies are on your watch list for this week? If you own any of the companies I spoke about today, I'm always really interested in hearing from you guys. But anyway guys, thank you so much for watching the video, and until the next one, peace.